Silver just made a new all-time high. It's currently trading at $85 an ounce. Gold is trading at $4,600 an ounce, and there's a rounded bottom on Palladium that I've identified with a potential upside target. Welcome, everybody. My name is Benjamin Poole, head trader here at Verified Investing. And in this video, I'm going to go over 3 charts with you: gold, silver, and Palladium, give you an idea of where my support and resistance levels are, and give you the idea or the direction that these charts are indicating that price action is likely to follow. So the first one we're going to go over is silver. Silver has had this nice move to the upside. I'm going to go ahead and get rid of the RSI. Here's what I'm seeing. You've got this nice rounded bottom on silver, price consolidation. You put in a higher low, secondary higher low, and then as you can see, we're just kind of stair stepping, and you put in additional higher low and another higher low. This to me is indicating that there's still a lot of buying pressure that's going to remain in silver. Now, I'm going to turn on the 200 or the 20 MA, and then the 50, and then the 200 MA. What I want you to notice is there's starting to become separation between the 20, the 50, and the 200 MA. What we're looking for is price to continue a little bit higher, but the 50 to move up a little bit more, kind of run a little bit more parallel with silver, and or the 220 moving average, as well as the 200 moving average. You want that to continue to climb to the upside. If we start seeing that on silver, we continue to make these higher lows on the charts, and we can maintain price above this upswing trend line, we are looking at a $90 per ounce or even $100 an ounce on silver. If we get a lot of momentum behind silver, it can really rally, as you've seen. If this upswing trend line decides it wants to fail, your first level of support is going to be this upswing trend line. Next level of support is look at the 20 moving average. Price is likely to come back in, retest the 20 moving average, wherever that is at the time, and get a little bit of a bounce. If it fails to maintain price action above the 20 MA, you're looking at a price all the way down to the 50 MA. And what you're wanting is the 20 moving average and the 50 moving average to stay kind of in parallel with each other on the way up with this increased separation. That indicates that the buyers are still significantly in control. Now, turn back on the relative strength index. A lot of people would see this as overbought, and it does indicate that it is overextended to the upside. That doesn't necessarily mean with this negative RSI divergence that there has to be a pullback. The RSI is a relative strength indicator. It's a momentum indicator. It's telling you what the price action has done in the past. It's a continuation movement. As the price stays as elevated as it is without a significant amount of volatility, the RSI will stay elevated for an extended period of time. So in order for us to use the RSI, we actually need a pretty significant pullback in the price of silver, and then another move to the upside. And that's when we can take advantage of the relative strength index. At the moment, the RSI is on the sideline, and we're having to basically take a back seat to what the 20 moving average is telling us, the 50 moving average, and the 200 moving average are telling us, as well as those lower bottoms. There's still potentially more upside in the chart of silver. Next one we're going to go over is gold. Here's the chart of gold. Gold's got 2 upswing trend lines. This first upswing trend line connects the 24th of September 2025. Secondary hit, third hit, fourth, fifth hit. This also is putting in higher lows on the charts. As long as we can maintain price above this low pivot right here, then price action is likely to continue higher. If we also turn on the 20 MA as well as the 50 and the 200, as you can see, we had a little bit of separation, failed to break below the 20 MA and the 50 MA. So now the 20 MA is heading higher. What you're wanting to see is the 50 MA to continue up, but the 20 MA to start increasing the volatility or the separation of the 50 moving average, especially with this movement of above the 200 MA on the price action of gold. Here's the secondary upswing trend line. You got the pivot top from the October highs, secondary highs from the 24th of December highs, and then here's the third hit. Now that we're above it, even though this is a bearish wedge pattern that we're in, if we fail to get below the 20 and then the 50 MA and break this upswing trend line, the price of gold is likely to head up to about $2,750 an ounce, and then even could attack the $4,800 an ounce level. Similar price action. As you can see, what we're looking for is this volatility in the price action of gold. But what we didn't have is we had this decent pullback, but there was no springboard effect where price got above this as the 30 moving average, or excuse me, the 70 pierced. We had this slow, methodical price consolidation. And so for us, we're staying away from the relative strength index at the time because we don't have the volatility involved. And that's what we need in order to take advantage of the RSI. So what we have to do is we have to rely on what's going on with the 20 moving average, the 50 and the 200 moving average, and this upswing trend line. A couple different factors that we're looking at in the price action of gold that is telling us that there is still more potential to the upside. The last one I'm going to talk about is palladium. Palladium has this nice rounded bottom. For me, what I'm looking at is about $1,972 for price action to stay right underneath it, maybe put in a bullish consolidation pattern, which means that we're going to go sideways to slightly negative on the price action of palladium. And then what that would do is put in a handle for this cup and handle pattern, and then we could take advantage of a move to the upside. And let me tell you, this is quite an extended move to the upside if we can get a breakout above this resistance level that we have in palladium. Here's that chart that I was mentioning. Nice rounded bottom. So you had this low right here, about $833 an ounce on the palladium chart. Now you've created this nice rounded bottom. Price action is creating a low, a higher low, higher low, higher low. If we can maintain that price action, what we're looking for is price to consolidate right at the underbelly, or not the underbelly, right below this resistance, right at the top end of this wide range red bar candle. This will allow all the sellers who were stuck in this wide range red bar candle to exhaust themselves, put in nice bullish consolidation right underneath the 1972 level. And then what we're going to do is we're going to take the midline. So the low end, the lowest point of the cup, take that all the way up to the rim of the cup pattern or the rounded bottom, extend that after or all the way up. This is giving us a price of palladium all the way up to about $3,100 an ounce. And look at this. You have this previous pivot top that you're going to have some resistance at 28.96 or 69. And then look at this wide range red bar candle. This is actually almost a topping tail on the charts of palladium, that there are still people who are stuck buying palladium at $3,106 an ounce. Once price gets up there, they're going to be so relieved that they're willing to exhaust themselves and sell this off, get out of this trade. And we want to be right there with them, picking this up for a swing short and look for about a 10, 15, even a 20% pullback from this level. If price action consolidates right under this level over an extended period of time, it'll give these sellers an opportunity to get out of the trade, and that would negate this potential upside move. Then it's likely to push up a little bit higher. However, right now, this $3,106 level, if price can break above this 1972 level, is where price is likely to head higher on palladium. So that's what I have for you guys. Thank you so much for watching. Thanks for commenting, subscribing, and sharing with your friends so that way they can take advantage of all this market action as well. And like always, if you guys have any questions, any stocks or commodities, or even crypto coins that you want me to go over, please put those in the comments, and I'm really happy to get those to you next video or two. So thanks again. Again, my name is Benjamin Poole, and we'll see you guys next time in the charts. You guys have a great rest of your day. Take care.